Make sure it's running. Yeah. All right. So we talked about time, how much time we have. We're working with Modern Mortgage in this company. They have a partnership. And I just wanted to reach out to you because we've worked so much in the past.
Sure.
And totally. And some of this will be on tape and some of it won't. You tell me whatever you want on and whatever you don't. We're just chatting and catching up right now.
Got it.
We've had a good relationship over the years, and I wanted to reach out to you and see if we could figure out, what's going on in the market. Talk about a couple things. Like I was mentioning, with me as a realtor, I'm going into my 24th year, and I'm basically trying to get back into it because I took some time off to build a house, as you know about.
Right.
So I'm just trying to come into this from kind of a different place. I want to have some fresh eyes, and I'm trying to get an idea of what it's like for the buyer, like a first-time buyer that's coming into this market and hearing things like, your median home price is $650, $600, $650, and I'm just trying to put myself in their shoes, and I feel like if I was hearing something like that, I would be discouraged.
Right.
And I'm trying to look back and think about, how did I do this when I was getting started? I mean, things were so much cheaper.
Absolutely.
I bought a house. My first house was on Cherokee in the Baker neighborhood. I got it for $88,000, and I worked very hard to get the down payment together for that, and it was a struggle, but I knew that real estate was a good idea. So I guess with that being kind of an intro, that's what I'm looking at, finding out, just getting educated from, someone that's been in the industry for, I think you said
47 years.
47 years.
47 years, and I've put over 12,000 families into homes during that time period too.
Wow.
Yeah, so for me, this is not a job.
No.
This is not a job for me. I wake up every morning now. Well, you've heard the saying.
Yeah.
Everyone's heard the saying. You never work a day in your life if you're doing what you love.
Absolutely.
And for me, that's my passion. That's what I love. Every day I wake up with the thought pattern now, who can I help today? Who can I serve?
Cool.
I want to be able to help others build wealth through real estate.
Awesome.
And that's that generational wealth that you can then pass on to your kids, to the grandkids, and so on and so on.
Yep.
Real estate has always been and will continue to be one of the best investments that you can make. And so understanding that, then that way I know how best to approach and work with that potential client and the journey that they're about to take, and especially that first-time home buyer. Largest investment that they will be making in their lives.
Absolutely.
At that point in time, they're nervous, they're anxious, they're uncertain, they don't know where to begin, they don't know who to necessarily talk to.
Or trust.
Right,
Yep.
and that's the key, is the trust factor.
I agree. In my business too.
Absolutely. That's the most important aspect to me, is building that trust. So when I have conversations, especially with first-time home buyers, but even anyone, seasoned people in the real estate purchasing venue, but for that first-time home buyer, going in and establishing a rapport with them, finding out what's important to them. Many times I will probably have a conversation that lasts an hour and a half with a client, and we may spend the first 45 minutes of that conversation getting to know each other.
Wow.
We don't even talk about real estate.
Okay.
We don't talk about interest rates. That doesn't even become a part of the conversation. I want to find out what's important to them. What have they been doing? Where do they see themselves 2 years from now, 5 years from now? Are they married, not married? Are they thinking about it? Is there, just sort of, where do they wish to go?
Because there's not one size fits all.
No, there isn't.
It's
absolutely
complicated, but not complicated, right?
Yeah. So getting to know them and finding out more about what's important to them, then we can start to build a rapport. And I start, giving them my background. When did I start? Where did I start?
Okay.
And how nervous I was when I first got into this business, and then buying my first house was trauma.
Yeah, absolutely.
So I get you. I'm on the page with you to that first-time home buyer.
Yeah.
And Again, just building the rapport and getting to understand what's important to them, letting them know 47 years in the business, 12,000 families that I've placed in real estate with the intention of building that generational wealth.
Yep.
There's no questions that are foolish. Every question is important. And I want that client to go into that process with eyes wide open. So that when they begin that journey, we're going to mitigate that fear, we're going to bring that level, keep the stress level down, and be there to walk with them through that entire process.
Okay, that sounds awesome.
Yeah.
Well, like we were talking about, I am trying to capture kind of that first time home buyer experience. And so we were talking about earlier, the kind of role playing a little bit. So right now I'm Jason the realtor. Hi Don.
Hi Jason.
But now I'd like to step into the shoes of Jason, the first time home buyer. And I'm nervous. And I mean, I'd be nervous if I wasn't in election year, but man, this is a weird time, isn't it?
It is. It is.
I've heard basically that, recently it sounded like interest rates. I kind of understand what an interest rate is. I mean, it's the price that you're going to pay for that money so you can buy a house, and we want those rates as low as possible. But I don't really get it. I mean, Don, recently the rates, we were supposed to have this rate cut, and they cut the rates, and I thought that things were going to get more expensive or more better rates, and now it seems like the rates have kind of leveled off and kind of gone up again. But I don't really get it. What's going on?
Yeah, good question. Excellent question, Jason.
Okay.
And the Federal Reserve, a little over a month ago, cut the federal funds rate by 0.5%.
Okay.
Now, the federal funds rate has nothing to do with long-term debt.
Okay.
Long-term debt, long-term rates are mortgages, predominantly, home equity lines of credit, those type of investment vehicles.
Okay.
The federal funds rate is overnight lending. Now, what that is going to impact, though, should have a positive impact on credit cards.
Okay.
That type, personal loans.
It's a big
You
deal.
should see a little bit of a decline.
Okay.
Now, the expectation, of course, is that 0.5% cut to federal funds was going to have a trickle-down impact on mortgages.
Okay.
It didn't. Primarily because of the election coming up, the presidential election, nervous investors on that side of it. But then a lot of the economic news that has been coming out has still been positive.
Okay.
Job growth was still positive. Inflation still somewhat elevated, but beginning to trickle down.
Okay.
So you've got a number of factors that were coming into play that long-term rates didn't have to come down, at least in the eyes of the investors.
Okay.
And that's why they've stayed high. Well, let me rephrase that.
Yeah.
Realistically, though, they aren't high.
Okay.
They're higher than the rates that we had during the pandemic era, and those were artificially created to not drive the economy, the U.S. economy, into a recession.
Okay.
So that's why they stayed that level.
Okay.
But if you look historically and you go back 60 years, the interest rates that we have today, that's the norm.
Okay.
Those are historical norms.
Because in the late 70s, we were in the 13s and 14s, right?
88, 89, a fixed rate was running around 18 to 19%.
Wow.
And I was doing adjustable rate mortgages that started at 12.5. And it was the hottest loan on the market.
Wow. You've seen a lot.
So there's huge changes. But the thing that we need to do in this case is just look at the entire picture for you. Look at your financial picture. And today is a great day to buy real estate. It really is. For a buyer in today's market is a perfect time.
It feels like, it feels like that's kind of what you always hear. It's always a great time. But I look around and I'm trying to figure out, well, maybe there's a better investment out there. I've been reading in the news lately that, the value of the dollar is really going down. So, in my mind, it sounds like, it seems like real estate would be a good investment because you're taking any extra money that you have that's in cash and it's being devalued if you're leaving it in the bank. If you take that out of the bank and you put it into a tangible asset, such as real estate, that's something that, number one, you're not paying rent anymore. You're controlling your living experience.
Right.
And I think it's pretty empowering as well. I mean, I know I felt empowered when I bought my first place, and the fact that I could have something that I could work on and see, reap the rewards, and that feels good.
Absolutely.
As opposed to putting it in the bank and saying, yeah, I think I could get 5%, but how long is that going to last? And is that 5% even covering things like inflation? And yeah, I think it sounds to me like that is a good way to go as real estate.
It is, absolutely. A tangible asset like that, historically, and you can go back 60 years on this as well, and you can look at the trends, you can look at the appreciation values of real estate, going back into the 60s and bringing it all the way up to the present day. There's only been a couple of blips on the radar where the market took a little bit of a dip down, but recovered, picked that loss up, and dramatic increases from there.
Okay.
Real estate has always historically been one of your best investments. I mean, right now we're still experiencing in this market approximately, and again, different areas, a little bit different appreciation values, but as a general rule, you're still going to experience at least somewhere between a 5 and 6% appreciation on your home. So it is a great investment. And from a buyer's perspective today, you're going to go into this market and you're not going to be competing like we were a year or so ago when you would get multiple offers. Now, buyers and sellers are going back and forth, and they're negotiating, and they're working on coming to a middle ground.
Okay.
Is what they're doing. So you as a buyer can come into this situation, and you don't necessarily have to go into it and offer a lower price to that seller. You may want to ask them for a $1 concession.
Okay.
And we're going to use those dollars to help buy down your interest rate.
Okay,
so
to
you've got
make
a
it
certain,
cheaper.
Exactly. So
Okay.
we've got a certain interest rate here today. Now, we do know in this business, economists will back this up as well, and the interest rates are going to come down.
Okay.
Are they going to come down to the pandemic levels? No.
Okay.
But we are going to see declines. That's probably now going to slide into 2025 and into 2026.
Oh, okay.
So what I would recommend that we take a look at, and we can look at a number of options, but one of my first thoughts is, let's take a look at buying your interest rate down temporarily for the first 2 years of your loan.
Okay.
So instead of being in that neighborhood of around upper 6s to 7, we could start you off in the upper 4s to 5. We start you off there for that first year.
Upper 4s to 5.
Okay. Then we go to year 2, it's going to go up 1%. This is how this program works.
Okay.
But now that's going to take you well into 2026.
Okay.
Well, by that time, long-term rates will have scaled back down.
Okay.
So what we're doing is getting you in now, getting you started in this journey, building wealth, starting you off at that lower interest rate so it makes it easier for you to manage your money, and then you can grow into it.
Okay.
I'm sure that your income 5 years ago, 4 years ago, 3 years ago was probably lower, and it started to come back up.
Right.
And your income will continue to grow in your profession.
Yep.
And so that's where we start you off a little bit lower.
Okay.
And then I keep an eye on things for you because I'm not here for just this transaction.
I know.
I want to create a relationship for life.
That sounds great.
And so I want to be there for you when the rates hit a good low mark, and we feel we've hit a bottom level for a while. We'll take a look at doing a refinance and taking that temporary rate buy down into a permanent loan again.
Okay.
I just closed one last week for a client that we did this for them a couple of years ago. And at that time, the initial note rate was at 7%. We bought it down to 5%.
Okay.
It was coming back up on its anniversary where it was going to hit 7%. The market at the time that we just closed this refinance was at 6%. and I dropped their rate down to 6, as well as knocking 8 years off their loan, because we did it instead of a 30-year, we did a 20-year. And that new 20-year mortgage payment at 6% is $100 lower than what they were paying on their original loan, and yet we also knocked 8 years off the term.
Wow.
So we've saved them a ton in interest over the life of that loan. They're going to be able to build equity at a much faster pace. So these are the things that I want to do for you.
Cool.
As that buyer, is be there as your advocate, well into your future.
Okay.
Again, help you build wealth through real estate.
Okay. Yeah, that makes a lot of sense. I've been hearing in the media just, the rates are so high compared to these, COVID times, and pandemic times. But it sounds like you have tools to basically make it work in any market.
Correct.
Is that right?
Absolutely.
Okay.
Another saying that I use as well, you're marrying the house, you're
Mhm.
only renting the rate.
Renting the rate. Yeah.
So that's it. Don't look upon the rate. Let's look upon the financial structure for you. Let's look at what's going to be good for you
Okay.
in this journey. So
Okay.
that we put you into the right home, at the right price, with the right housing expense, so
Okay.
that you're not house poor. That's the goal.
Okay. I'm going to take off my buyer hat now.
Yeah.
I'm going to put on Jason the Realtor hat back on.
Sure.
So, yeah, this is fantastic. I appreciate what you're sharing for first-time home buyers. I, as you know, am a devout believer in real estate. I mean, that's kind of how I got here, is from the investor route. I wanted to basically have a license so I could purchase properties and I could get a commission. I like that plan. And so that's kind of what brought me there. But then I started getting involved and helping people, and like yourself, it's enjoyable to be able to watch someone start with a very small amount and make, in some cases, an empire. I mean, we've worked with a couple in the past that I'm sure you remember. They're doing great, and they have done exceptionally well with real estate, and I was super happy to help them along that journey. And in fact, they basically said, I think we're good. And they're in their early 30s, and they're in another country right now. And they just go back and forth between that other country and Denver, and they have a great time. And so I completely believe in the process. But like I said, I'm trying to kind of reinvent things from the standpoint of, let's go back to the basics. Because, getting out of the market for a little while does me a world of good to get out there and start looking at properties that are at that entry level point. So that's actually why I was late today. I was running around taking a look at, I got into one condo townhome property up in Thornton. And then I just got back from taking a look at a single family home with the garage in North Park Hill. And so I'm looking at a price point. One was $299 for the townhome, and the other one was around $369. And these are both properties that you can make them work. And what I was alluding to in another post, I'm working with Instagram right now, and I'm a little frustrated because I have stayed away from social media for so long, and I realize that it's time. So I'm jumping in, and so at any rate, I'm working on getting that that information together. And so I did this post the other day on, I do believe that there's some products out there that are around the 300,000 range. And I was just going off of a hunch that I had after, doing a little browsing in the MLS. So today I verified it, and I saw these two properties. Can you just give me just a rough idea? Maybe we can get a calculator out. I'm going to go back into Jason Realtor comes off and Jason first time buyer goes on. I've got these two properties that I just fell in love with. And we talked earlier, Don, and you had qualified me. And you said, we talked on the phone, and you took the time to get an idea of what was needed, or what was needed. I got you the documentation that you needed in order to basically give me an idea of how do I go out there and start looking for homes.
Correct.
I have to have a budget, right? You have to tell me, like, how much can I afford?
Absolutely.
That's kind of where we start, right?
Correct.
Okay.
Correct.
So I appreciate you letting me know that I qualify for under 400,000, if we can kind of keep it around there.
Mm-hmm.
So I found these two properties. Like, where do we go now? Like, how does this work? I mean, I haven't had a mortgage before. How much do I need for my mortgage? I mean, I'd like to just, if I like this house, this one in North Park Hill, what do I do? Like, I'm new to this. I know I need a down payment. How much do I need to put down?
Great questions again. Great questions.
Yeah.
Here's what we're going to want to do.
Okay.
We'll take a look. So there's two properties that you looked at.
That's
We're
right.
interested in both of them.
Yep.
Okay?
Yep.
Doesn't matter which one we start with. Let's
Okay.
start with that Park Hill property.
Yeah.
So what we're going to do is we're going to plug in the numbers,
Okay.
plug in that particular property,
Mm-hmm.
so that we've got that purchase price,
Okay.
property taxes,
Mm-hmm.
homeowner's insurance. We'll put those numbers together on that particular home. Now, in your particular case, we talked about doing a 3.5% down payment.
Okay.
And you had said you wanted to go with an FHA loan, good
Yeah.
option. Well,
Yeah.
we're going to take a look at conventional too.
Okay.
Let's take a look at both. Your credit scores are fine,
Okay.
but it could work either way. So we'll run numbers on a conventional, we'll run them on an FHA,
Okay.
on this particular property, and see what that payment looks like.
Perfect.
Then what we'll do is we'll take a look at, okay, how this home has been on the market for a little while, and there may be some room
Mm-hmm.
that we can work with the seller on this particular property.
Okay.
Let's see what it looks like if we could get 5,000 or maybe 10,000 from the seller.
Okay.
This, we're going to offer them their full price, but let's see what that could look like and what impact that could have on that monthly payment for you.
Okay.
So now when you get out there to actually pursue an offer on that property,
Mm-hmm.
you're going to know what a full price offer with no concessions.
Mm-hmm.
You're going to know what a offer full price again, but with some concessions, and what difference that's going to make in your monthly payment. I guarantee you at that price, with a $10,000 concession, we're going to be able to make a nice reduction in that monthly payment because we're going to be able to reduce your interest rate nicely.
You lost me. I don't know what a concession is.
Okay, what we're doing, so we go in at $399.
Yeah.
That's the price we're going to offer. We're not going to
What's it? 369.9 is the. is the
$369.
Yep. Exactly.
So we're going to offer them that price.
Okay.
But we're going to ask them to give us $10,000.
Oh, okay.
Okay.
That's the concession.
That's the concession.
Okay.
So we're giving them full price, but we're asking for $10,000.
Okay.
And we're going to take that $10,000
Okay.
and we're going to apply it to buying down your interest rate.
Okay. So
Say
that's
we're-
what you were talking about. Like if it's 7%, we're gonna put $10,000 to pay it down because that costs money. If you want a cheaper rate, you have to pay for it.
Exactly.
Okay.
Exactly. So then we're going to take a look at how much can we get the rate down.
Okay.
$10,000.
Okay.
Okay, that's what we want to look at.
Got it.
So that gives you a starting point,
Mhm.
so that when you get to that stage where you're going to present an offer, you're going to know what a full price offer is
Mhm.
without asking the seller for anything, and then you're going to know what it looks like again, full price offer,
Okay.
but getting $10,000.
Okay.
Then we have some groundwork. We've got
Uh-huh.
something that we can begin to work with and begin to negotiate.
Yep.
Okay, now,
Because
I don't
there's-
want to tell you that you're going to get it at full price with 10,000,
Right.
but it gives us a path that we can pursue.
And we might as well start at the very top, right?
Right.
And then it's just better news from there.
Right. Now, I haven't looked at this listing. How long has that home been on the market?
You bet. Do you want to just take a look? It's, I think, 40, was it 40 days? I'm not sure.
Yeah.
I can,
So with that being said, then this could be a prime home where that listing agent
Mhm.
and the seller may be open
okay,
to offering some concessions
okay,
on this particular property.
Perfect.
So that's what we want to try to pursue.
okay.
And again, we talked about this earlier, going into this entire process, eyes wide open.
Yep.
Want to make sure that your questions are answered
Mhm.
so that when you do finally present an offer on that home, you know what it's going to look like. There
Okay.
aren't going to be any surprises coming down the line.
Yep.
We're going to get the offer in and try to get you the best overall terms that we can
Okay.
on this and get that interest rate down initially.
Okay. So do you have any idea well, I think you do have, because this is your job.
Yeah.
What would it cost? Can we look at these numbers right here and just figure it out? Like I know that it says the taxes here. Do you have an idea of how much insurance costs per year? I mean, could we get pretty
I
close?
can give you a best estimate on that.
Okay.
Right, yeah.
So what do you say? I'm trying to figure out how much am I going to have to pay? What's my payment every month on something like this?
Let me grab
Yeah.
my calculator.
Perfect.
Because I cannot be like that.
Good, sounds good. So even after 47 years, you can't do this in your head, right?
No.
Okay.
That crystal ball broke a long time ago.
Okay.
I need to get my peepers on here so
I hear
can see
you.
what
I got to do the
doing.
same thing.
Okay.
If you want this, you're welcome to. That'll help.
Let me get to the program that I want to work with here.
Absolutely.
Got a number of them on my phone, and I want to grab the right one for this.
While you're doing that, I'm going to grab my peepers because that helps. You doing okay on time?
Okay, so we've got 369.9 for starters.
That's right.
Okay? So 3.5% of that is $12,947. It's $12,946.50, but we have to round it up to the nearest dollar.
Okay.
So $12,947. That would be your down payment.
Down payment, and that's with the FHA loan?
Correct.
Okay.
Correct. Okay, so your loan amount's going to be $356,953. Okay, that's that purchase price less that down payment.
$356,953. Close that door. Okay.
So right now, 6.875. That's today's prevailing rate.
Today's rate. Okay.
On a 30-year, that loan amount, that principal and interest, now this is just the principal and interest portion of the payment, would be $2,344.93. That's your principal and interest portion.
And then you have to pay for your taxes and your insurance on top of that.
That is correct.
Okay.
So the annual taxes on this particular home are $1,384.
Okay.
So add $115.33 to that.
That's the
Monthly portion, right? That would be 1/12 of those annual taxes.
Got it.
And then at this price point, I would recommend that you add in another $175 for homeowners insurance.
Per month.
Per month.
Okay.
Correct. And then the mortgage insurance on this.
What does that mean?
Mortgage insurance, anytime you have less than a 20% down payment
Okay.
on your home, you're going to have mortgage insurance. The mortgage insurance, in essence, is protection for the lender against loss due to foreclosure. That's the purpose of it.
Okay.
Do know that it is not for the life of the loan,
Okay.
okay? But on an FHA loan, it is going to be there for 11 years. Now, that doesn't mean that we can't look at doing a refinance
Okay.
down the line when these rates start to slide
Okay.
down. The rule of thumb is we'd like to see a 1% drop in that rate. So instead of 6.875 or 5.875, that's when we're going to want to talk about doing a refinance
Okay.
and lowering that payment and potentially getting rid of the mortgage insurance.
And that's fairly likely in the future.
Absolutely.
Okay.
Because if you figure anywhere 5-6% appreciation, you know, it may be 2 to 3 years because it could be a little more than that, and you've reached a point with the combination of the appreciation as well as the reduction in the principal loan amount that you've now covered that 20%.
I think I see. So you're saying with this mortgage insurance, I don't think we figured it, but how much would that be a month?
Yep. That's $356,953. That would be $166.46.
Okay, so just so I understand, I have to pay $166.46 in addition to these other things that we calculated because I'm putting less down.
Right. Absolutely.
But that's cool because I mean I don't have a lot to put down. This allows me to make a little higher monthly payment on my mortgage in order to be able to not have to put as much down.
Correct.
I'm putting 3.5% down as opposed to, I think you mentioned we were going to look at a conventional loan. What does a conventional loan require for you to put down?
Now, on a conventional, you could get by with 3%.
Oh, okay.
Okay, so
Wow.
you could get by with a lower amount on that.
Okay.
So 369.9. Your loan amount would be 358.803.
Okay.
Now, the interest rate, though,
Mm-hmm.
with a 97% loan to value conventional loan is going to be a little higher.
Okay.
Okay, that's kind of the trade-off.
I see.
The FHA loans are government-backed. You're going to see normally, now this is not every single day, but historically, normally you see the interest rates on those just a little bit better.
Okay.
Okay, so we would be looking at a rate of 7.125.
Okay.
Okay, principal and interest is going to be $2,417.32. Okay, so let's take a look at what you wrote down on the FHA. What was the principal and interest there?
Yeah, 2344.93.
Right.
So,
So the principal and interest comes in lower.
yeah.
Homeowners insurance,
Mhm.
and property taxes are going to be the constant in this particular scenario.
Okay.
So those aren't going to be any different.
Okay.
Now the mortgage insurance, though,
Mm-hmm.
358.803 is going to be 114.81.
That's a huge difference.
So the mortgage insurance is a little lower,
Okay.
but your principal and interest payment is higher.
I see. I see. So, I guess we just add them and compare, right?
And then that way we're going to know which is going to work best for you.
Yeah.
The FHA or the conventional.
Okay.
And then we still haven't discussed what if we can get the concession,
Right.
right?
Okay.
And those are numbers where we're going to want to get with your agent and have a conversation on this and come up with a game plan as to what is going to be the best course of action. What do we think we could get?
Okay.
Do we think we could offer full price and get 10,000?
Mm-hmm.
Okay, let's see what those numbers are going to look like.
Okay. That makes sense. I hear that agent's pretty good. This agent that I'm working with, he's
Great.
He's
Sharp guy.
Absolutely. He's been in the business for a while.
And that's what we want to do. And that's how we go through this process. So this isn't just, here's a rate, here's a payment. We don't go through that. Well, we do go through that, but at the same time, we're doing so in a manner where we're attempting to structure the best overall option for you.
Okay.
So when we put that contract together, we're putting the best terms possible so that you know if I offer full price and get 10,000, this is what it's going to look like.
Okay.
If I offer full price and there's no concession, this is what it's going to look like.
Okay.
We want to put you in the best spot possible.
Okay. Yeah. Can we go ahead and add these up and see which one's better
Sure. let's
without
start-
the concession, and then we go to look at it with the concession?
Well, let's start with the conventional since that's the last one we finished. What
Yep.
was the principal and interest?
That was 2417.32.
And then we had 175 for insurance.
That's right.
114 for the mortgage insurance.
That's right.
And then what did we have for property taxes on that?
115.33.
Okay, so all in, principal, interest, taxes, insurance, mortgage insurance. That's going to come in at $2,821.65.
Okay.
Okay. Now, where were we at on the FHA?
On the FHA, we had a rate of 6.875, and the principal and interest was 2344.93.
And again, plus the 175.
That was for insurance, and then the taxes on this one.
Same.
Yep, taxes were the same.
And then the mortgage insurance.
That's where we had the difference. That was 166.46.
Now we're at 2,801.39. Comes in a little lower.
Yeah, it does.
The FHA does. We've got a lot more wiggle room with that particular program as well. And now as far as the buy down goes on this, that's not something that I could do here just on my phone calculator. I have to get into my operating system.
Understood.
But generally speaking, at that price range, with a $10,000 concession, there's every likelihood that we're going to be able to use that to get that interest rate down. Very close, if not to a full percent lower.
No kidding.
Yeah.
10,000 people.
10,000 at that price range should get you very close. Now it might be 6, not 5.875, but it's going to be very, very close.
Okay. That makes a huge difference as far as your payment, right?
So let's do this. Let's assume that it's 6,
Okay.
right? And now give me that loan amount again that we had for the FHA program.
Yeah. So the FHA, we had 6.875. Principal and interest, is that what you wanted?
No, what the loan amount.
Okay, loan amount for the FHA was $356,953.
Okay. So now let's say we take that rate down to 6%. That principal and interest payment goes down to $2,140.11.
Wow. And that's down from, it was $2,344.
So that's almost $204 less per month by getting $10,000 from that seller to buy down your interest rate. And that is on a permanent basis.
Right.
So that's for the life of the loan.
Okay.
That we could do that. So again, we've got our options. The other thing that we could then take a look at, now that's where I would really need my system need to be in my operating system.
Okay.
What if we wanted to look at buying it down 2% for the first year?
Okay.
And we could take a look at those options. So when we get back together again, when I'm in front of my computer, we can discuss what that looks like so we can really get granular on this.
So that's not unrealistic to think you could go even more than 1%.
Exactly.
Okay.
Very, very possible that we could do it. And this is where we want to get together with your agent and really brainstorm on the best plan of action on presenting an offer. What do we think we can get?
Okay.
And then from there, we're going to know what this is going to look like for you.
Perfect.
All righty?
This gives me a lot of hope because, like I said, when I first started, I was like, I can't afford a house. I mean, I'm hearing on the news that they're $650,000. And I mean, I'm willing to do a little bit of work. You know, I don't mind doing a little sweat equity, they call it.
Right.
You know, and do a little bit of cleaning. I mean, there's so many YouTube videos out there nowadays. I know some of them are not the best, but there's some really good ones where you can learn how to do a lot of different things.
And that's one of the biggest upsides to buying real estate.
Okay.
It's your home.
Yeah.
You don't have to go ask a landlord, hey, can I paint this? Can I refinish my cabinets?
I like that.
Can I do this to my flooring?
Yep.
It's your baby.
Yep.
You own it, you put your personal touches on it, and all of those type of things are going to add value to that residence.
Awesome.
You're building more equity.
I love it. And you also, I've heard that as you own longer, you can, what does it mean to borrow against it? Like, I've heard people talking about home equity loans and that sort of thing. Like, how does that work?
Yeah, that would be a little bit more down the line.
Okay.
Okay. The initial purchase gets you into that home, and then if you put in some sweat equity, do some upgrades on this, that's when you're going to build more equity in that home because that value of that home is going to go up.
Okay.
Now, when you've raised that level, then we can take a look at what's called a home equity line of credit.
Okay.
Okay. It would be a second mortgage. Wouldn't impact your first mortgage.
Okay.
It would be in addition to, and from there you can then draw equity out, where you then, if you wanted to do additional improvements on that home, or maybe you wanted to use that to pay off some debt. What if you ended up having to use some of your credit cards, maybe to make these improvements on the home?
Okay.
Now you can pull a home equity loan, which is, trust me, going to have a much lower interest rate on it than your credit cards, and liquidate those credit cards.
Okay.
That home equity line of credit, you would want to check with an accountant.
Yep.
But chances are very good you could use it as a write-off as well.
Oh, no, on your
So
taxes.
that's where you're going to want to check with an accountant.
Absolutely.
That's not my lane, and I don't want to step in that one.
I hear you. So, and you have had some rental properties in the past, right? Are you doing that?
Yes.
So, once I buy my first house, is it unrealistic to think that I can buy other properties fairly? I mean, if I've seen other people have a lot of success with that. Is it realistic to think that I could do the same thing? I mean,
absolutely. I've got clients that I've worked with for a number of years, and I've got two that just reached out to me over this last weekend. And they've got fairly significant equity in their current primary residence.
Okay.
Been in it a couple of years. They want to keep it, but they want to go buy another home. So what we're going to do in their particular case is we're going to do, just like we were talking about, a home equity line of credit.
Okay.
We're going to pull money out from that.
Okay.
And then they're going to use that money to go buy their next home that they're gonna move into as their primary,
Okay,
turn around and rent their current residence.
so they get to keep both.
Right, and I've got a number of clients that have done that have taken these as stepping stones. Don't turn around and sell, but they pull equity out, use it to buy the new property, and they built wealth through real estate by continuing to do that
Okay.
on a regular basis.
Jason was telling me never sell. That's what he told me. Maybe that's what I should do. Don't sell.
Right.
Just buy another property if I can afford it, if the
Right.
numbers work,
If
right?
the numbers all work out, it's
Right.
a great way to go, absolutely.
Because you have to make sure that you've got, I've been doing some reading on this, and you've got to have extra set aside for, what happens if you have vacancies, and your tenants that you're now renting your old house out, your tenants aren't able to pay for a couple months. Well, you should probably have some
A
reserves,
cushion.
right?
Yeah, a cushion, absolutely.
And then it's not stressful, it becomes something that you can manage.
And when that time comes,
Mhm.
that's where we're gonna get back together, crunch the numbers,
Okay,
put pen to paper, and make sure that the math is gonna work for you, that the rent that you can get on your current home
okay.
is gonna cover that house payment.
So you can tell
Very,
me
very
all of
close,
that.
exactly what that's gonna look like, and then what this new mortgage payment is gonna look like.
Okay,
And we wanna make sure we don't cap all of your assets on this. We want a
For sure.
cushion, we want some reserves,
okay.
so that you're covered.
Okay, because you want to have a comfort level. You don't want to be stressed out. You want to approach this from a very educated standpoint and grow your wealth, right?
Absolutely.
Okay.
That's what it's all about.
I am I'm excited. This gives me some options, and I didn't think that I had any. So I appreciate your time.
No, my pleasure.
Cool.
My pleasure.
Well, thank you for
Jason,
chatting with me.
a pleasure.
Yeah, absolutely. I'm going to give you a call, and I'm going to talk to my agent about putting a contract together.
Sounds good. Let's get a conference call. Let's get all of us on the line together
Okay?
and brainstorm on this, and then we can put pen to paper.
That works for me.
All righty?
Thank you.
Sounds like a plan?
Nice to meet you, Don.
Wonderful. Wonderful.
Have a good one.
You too. Take
All right.
care.
Nicely
That was
done.
good.
Yeah, I do too. That was like flowing.
I can't wait to see the edit.
I agree. And I think I can actually